The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com. Welcome to the Weekly Perspective for the week ending 19 April 2024. Well, let's take a look at week's trading in silver. And you can see that volatility is coming higher and higher, meaning if you look at the swings during the week, we had the lows around the 28 level, 28.05 on that. And then the highs, we got a spike up to almost 30. And I'd say these more modest highs were around 28.75. So we're getting these ups and downs like any market, but these ups and downs are bigger in price action than we've seen in quite some time. What's interesting is how well it's holding the 28 level this week. And data that is fresh or new is more powerful than data of 3 weeks ago, 3 months ago, 3 years ago. In other words, when you do these algorithms, they weight the current activity higher than they weight activity in the past. And that only makes common sense. You can also see is that on these lows, like I'm showing you with this cursor, you can see that there was a lot of buying that came in, and this thing shot almost straight up from, according to what I'm looking at here, 28.12, all the way up to, almost 29, 28.92. That's a pretty big move in a short amount of time. And what's that based on? Buying pressure, a lot of volume. And then, of course, it shot down and basically went all the way back down. And the selling pressure took this much duration. In other words, it took almost a full trading session in order to get it back down. And then another trading session comes in and bang, it's right back up. This is something we haven't seen in the silver market in quite some time. When you see these sell-offs, usually they continue. There's follow-through, there isn't support, and that type of thing. I don't want to take any credit here, but I have had consultations with some pretty interesting folks along this road I'm on. And I have implied what happens during this delta hedging phenomena, which you can basically set your watch with options expiration, how the delta hedging works and what the algorithms do. All markets go up and down, and you could actually go opposite if you know what you're doing, very sophisticated, and had the pocket in order to, let's say, overrun the algorithm or take it the other direction. I'm not saying that's happening, but there is some interesting movements in the derivatives market, which is what's driving this market. Yeah, the Chinese may be buying, like Ross Norman said. I put his article up on my Twitter feed. You can read it. I think there's some merit there. I'm not going to discount it too much. But you also have to look at the total market. And the total market's a derivatives market. And that means what runs this market is paper trades. And so who's on the long side in these paper trades? It's Mr. or Mrs. X. We don't know, or I certainly don't. But what we do know is what the activity looks like. And the activity has changed, definitely. So there may be someone out there that pulls a Warren Buffett. Many of you probably don't know this. Some of you do, students of the silver market. And Warren Buffett, I forget the year, but it was pre-1998. He bought a fair amount of silver options, and they expired out of the money. Slightly out of the money, but he exercised them anyway, which is legal. If you had a strike price, let's call a strike $29, and let's say that on options expiration, it closed at the price we're looking at, $28.65. There's no reason you couldn't exercise the $29 option. Yeah, but you're paying 35 cents more. Yeah, you are. Okay, fine. I'm exercising my option. Send it over. And this kind of maybe sent a chill down the spine of a few people that were on the other side of the trade. I don't want to make a big deal out of it. All I'm implying is that this is an interesting market for both gold and silver. And all that I've said, you can take with a grain of salt. We'll have to see what happens in the next options expiration. This could be a short-lived phenomena that the market settles back down and gets into a trading range and stays there for weeks. I really doubt that's the case, but it could be. I really don't know. But it is exciting to see silver bounce off a support level on a 5-day chart like I'm showing you, with some substantive amount of buying pressure. I mean, if you look here at the volumes, you're down here selling, selling, selling. Lots of buying comes in, bang, back up. Sell, sell, sell. Buying comes in, back up. Buying comes in, back up. Buying comes in, back up. Sell off, buying comes in, back up. Again, someone may be playing these algorithms for for the game, the fun, and the thrill of taking delivery of a lot of silver that no one expected to happen. Just changed the landing page for the morganreport.com, asking the obvious, are you prepared for another economic downturn? And what I'm doing now, I'm going to give you a free 30-minute personal consultation with me, not one of the staff, and address your concerns. If it's about the physical market, the derivative market, the equity side, the ETF side, whatever concerns you, your pension being there, retirement, Social Security, SSIP, it's worldwide service. We have the Morgan Report in both English and German. We don't have it in Spanish anymore. And you get that consultation, and it is free. In other words, you have to sign up for the premium service to make good on your end of the bargain, but money back guarantee applies, which means we'll have our consultation to go in and look at the website and everything, look at our top tier, mid tier, junior producers and speculative picks. And if you decide it's not for you, you get your money back. So it's a pretty sweet deal. You can read the whole sales page. I'm not going to read it to you, obviously. If you're interested, I mean, we look at what's ahead of us. The dollar is coming down. We all know that, but it's declining at a slower rate than, let's say, some other currencies, because other nation states are printing their currency at a faster rate than we are, and we're printing it like madmen. Bank failures ahead. Of course, the war situation is not getting better. What's the Fed going to do? Probably the only thing they can do, as the late, great Richard Russell said, print or die. Stock market could collapse, certainly could come down, the after effects of the illness. Cryptocurrency, I'm not calling for a collapse. It's had a winter, but I'm worried about this halving with Bitcoin. Everybody's certain that it's just going to skyrocket up like it has every time before. Well, everything comes to an end. I'm not saying it's going to be an end, but I'm very concerned. Wrote all about that in last month's Morgan Report. It was all my own thinking, definitely outside the box, definitely contrarian to the contrarians. The federal debt, $34 trillion. It's really $20 trillion more than that per Catherine Austin Fitts and Professor Sizemore, but I won't go into that now. Retirement savings, so you have enough. Tax burden keeps increasing. Political and economic upheaval, runaway inflation, etc. So all those things we cover. It is a membership based. I do my own work. Yes, I read almost everybody else in the sector, and some have influence on me, but not too many. There are some really good thinkers in this regime. I won't deny it. In fact, I think I'm kind of proud of that. And so that is the sales page. So we come up here to members option to join. There's two things you can do. You can join one of the services. You can click here and find out about them. Or you can just scroll down to the landing page I just showed you and click here and get on our free list. And it is free. So you just, put an address in there and then hit join. And you will get a double opt-in, meaning you will get a thank you, and you will decide, check your email, say, yes, I really want this. Yes, it was really me. And you're on your way. It does pay to have it, especially as I get more involved, as this market gets more and more dynamic, and there's more and more to cheer about in the precious metals. And once you're a member, you just come here to the landing page and hit the members login. And once you're logged into the members only portal, it'll greet you. It'll tell you what level of service you have, and it'll provide your name as long as you give us one. And if you join as XYZ hedge fund, that's what will show up here. And you scroll down. We have support at all times. You can be on our text service. Just give us a text phone number. You'll get text alerts. Then there are, this is the portal, Ask Me a Question. So basically, you just click that, write your question. And then if you are a member, your consultations are half price. And this market is heating up because we are getting more consultations. Now I'll go ahead and finish with gold. This is not apples to apples. I showed you a 5-day chart on silver. Here is a 1-month chart on gold, but you can see we've had this big up move. We're starting to round off here, and I wouldn't be surprised if gold hits a trading range for a while. And silver may continue to move up. It may not, but I think gold is going to continue in the lead, meaning that it's going to hit a trading range, probably a high-level consolidation, and silver may continue to move up to 30 or maybe beyond. Time will tell, and then it too will go into a trading range. I do still expect, even with what I talked about in the options and futures market, that this market will cool off for a while, probably going into the summer. Doldrums, we're not in the summer yet. We're in the spring, but nonetheless, I think we could see by the end of May or something. Having said that, there's so many black swans, as you all know, that there's a possibility that that's all nonsense. And because of what's going on in the banking sector and everything else I read off on the sales page, any one of those things could continue to ignite these markets even further. So the main point is, if you don't have a position, you should. If you do have a position, it might be a time to kind of weed out the cats from the dogs and just, get the best of the best, sell ones that really aren't performing and look for ones that are. The equity side is where the action is going to be. We're still getting non-confirmation from the mining sector. In the most part, there are a few stocks that have done well or participated in this metals rally, but not that many. That's where the value is. And I'll just state that emphatically. You could probably buy at this level, especially in the golds, because they're selling for values where gold was priced at like $1,850, not at $2,400. So it's a good time to buy. I wouldn't buy hand over fist, but I certainly would look to accumulate, at least at these levels. And could they go lower from here? Yes, they could. But as far as a long-term perspective or a value investor, there's something to at least nibble at currently. So I'll sign off. It's David Morgan of morganreport.com. I'll be back with you next week with another weekly perspective.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.